this selling price, we have to compare it with the stamp duty value. Okay, and if the stamp duty value is more, then we have to substitute the stamp duty value and accordingly compute the profit. And if business, then business income; if capital, then capital gains; and if it is IFOS, then IFOS. So in all the three heads of income, we have a same to same concept. Okay, but understand this part of the provisions very, very importantly. In fact, I always put little bit of extra emphasis on this particular concept because very good concept and students can go wrong here in this particular situation. Okay. Now see, first of all, it is a loss. Cost of the property was 10 lakhs. Okay. So the actual, let me put the actual figures. Cost is 10 lakhs. So the selling price will be 9 lakhs. And ultimately there is a loss of 1 lakh. Okay. This is the actual situation. There is a loss on sale of the property. It was acquired 4 years back. Now, instead of the selling price, we want to have a stamp duty value first of all. Okay, we want to compare it with the stamp duty value first of all. Then we have to check whether stamp duty value is more or less. Okay. Now, this stamp duty value, friends, we can have it on two separate dates. One is on the date of the registration. Now, entered into an agreement to sell property on 1/6. So on 1/6 of the previous year when the value is 12 lakhs, and sale of the property was actually registered on 1/11. On the date of registration, it was at the rate of 5%, 55 lakhs. So 55,000, sorry. So it was going to be 11 lakhs. Okay, so we got a stamp duty value on two separate dates. One is on the date of enter into agreement, when you have agreed to sell, that means you have signed the document. And secondly, at the time when this particular agreement has been registered. Okay, so you have got a stamp duty value on two separate occasions. One is at the time when you enter into agreement. Second, when your agreement is registered with the stamp duty authorities. Now, which date you will consider the stamp duty value? That is going to be a first relevant question. Okay, now the loss is like that. On the date of the agreement, that means when you have signed the papers, that is a date A, I just call it as. Okay, so on the date A, which is a date of agreement, whatever is the value, 12 lakhs of rupees in our example. Okay, so that 12 lakhs rupees will be considered as relevant stamp duty value if on this date you have taken some advance money. On this date, you have taken some advance money. Okay, and this advance money should have been taken by means of an account pay check or approved banking channel transaction. So in the given case, the advance money of 1 lakh was taken by account pay checks. It is already printed on 1/6 of the previous year. Now, since the advance money was taken by an account pay check on 1/6 of the previous year, the 1/6, the stamp duty value on 1st of June will be considered as relevant. So on the date of registration, the value will not be relevant. However, if the advance check was not taken, then the stamp duty value on the date of registration of the agreement will be considered as relevant. Okay, so in the given case, the stamp duty value considered will be 12 lakhs. Is that okay? Now, I will take you to that particular provision, and as already told you that provision is applicable, same duplicate concept in capital gains and duplicate concept in income from other sources also. Okay, 1 second, baby. Come on, mamma mia. Okay, see, section 43C. Okay, where there is any transaction of other than capital asset, that means a stock in trade, land, building, or both, that means immovable property. Okay, if the value is less than the value assessable by stamp duty authorities, that is the state government authorities, then the actual value, that means the stamp duty value, will be deemed to be the full value of consideration. So you want to compare the actual selling price with the stamp duty value. This is what you want to compare. If the selling price you have done undervaluation, that means if the selling price is less, then stamp duty value will be taken as a full value of consideration. That means the selling price considered relevant will be stamp duty value. However, now extra point. Okay. Now, first of all, now which date you will take a stamp duty value? On the date of the agreement or on the date of the registration? Okay. First of all, okay. So it says that where the date of the agreement fixing the value. Okay, one second. Yeah, subclause 3, where the date of the agreement of that particular asset, okay, and the date of the registration are not the same. If date of the agreement and date of the registration is not the same, then you will take the value on the date of the agreement. Okay, and the condition is you will take it on the date of the agreement, and the condition is that some consideration you should have received it by means of an account paid check or approved banking means of transfer on or before the date of the agreement. Subclause 3 and subclause 4 together. So on the date of the agreement, if you have done that advance money transaction by an account paid check, whatever is the amount, advance money, I mean, it is not a hard and fast rule that only this much you have to take. Any amount, small amount, but by account paid check and or it should have been by approved banking channel transaction. This is account paid check or bank draft and other approved channels. Okay, so in the given question we have taken it on the date of the agreement. Okay, now second point, there is a tolerance level. The difference between this actual selling price and the stamp duty value, if it is a marginal difference, then losses we will excuse you. That means then we will not take stamp duty value. We will accept your actual selling price as the relevant value. Okay. Now the proviso says, now here also you are likely to do mistake, but pay maximum attention. Okay. Where the stamp duty value does not exceed, 110%, when it does not exceed 110%, okay, of the consideration, that means of the actual selling price. So if the stamp duty value is less than 110% of the actual selling price, okay, in that particular case, whatever is the actual selling price, whatever the consideration that you have got it, will be deemed to be the full value of consideration. That means we will not consider stamp duty value as the relevant value. But the difference between the stamp duty value and the actual selling price somewhere should be between the range of 10%. This is how I say. Or you can call it as 110% of the selling price. So this is one test. So in our question, see, the stamp duty value we have decided is 12 lakhs. Okay. Actual selling price is 9 lakhs. See, actual selling price is 9 lakhs. Stamp duty value we have decided is 12 lakhs. Okay. And 110% of the selling price. So roughly it will be 9.9. Okay. Now is your stamp duty value in this marginal difference of just 10%? No, it is 12 lakhs. It is more than 110%. That means stamp duty value is not less. Okay. So in that case, the stamp duty value will be taken as your full value of consideration for the business income chapter, because in the given case, the property is stock in trade or it is a business asset. Okay. So now we will have to take not the selling price as relevant full value, but relevant full value will be 12 lakhs, and 12 lakhs minus the cost is 10 lakhs. So the difference is now going to be 2 lakhs, and these 2 lakhs will be taken as your business income. It will be taken as your business income. Okay. So let's check whether this actual loss, whether it was debited or not debited to profit and loss and all that. Let me just check whether anything else. Because sometimes this question will really confuse whether the amount was actually debited then not debited or something like that. Okay. Fair enough. This property was intended to be resale due to could not be sold since last few years. Okay, the loss on sale of property has been debited to capital account. It has been debited to the capital account. This is, I'll have to adjust it now, because this is intended to be resale. You have got a profit now. In fact, it is not a loss now. The loss was as per your records, but with the stamp duty value, it is going to become a profit now. So that profit, I will have to straight away take it to the computation of the total income, and the 2 lakhs rupees, that is basically 12 minus 10. Okay, these 2 lakhs of rupees will be my business income, will be included for the purpose of computation. Okay, now having done this entire adjustment, we have to go to all the items of debit credits. Okay, now credit side, IT refund is actually not an income, so that much of income I have to less. However, there is no data about interest on IT refund. Had it been an interest, then interest is taxable as IFOS. But income tax refund, because income tax is not allowed as a reduction, so income tax refund is not considered as an income. So I'll have to less 4,500. Okay, because anyway, I have started my answer with 93,950 as my PNL. So I have to less this. Okay, so this is less. Okay, interest on company deposit, I'll have to less from business income, and I'll have to add it to IFOS. So because it is interest, so reduce from business income, add to IFOS. Interest on bonds, same thing, reduce from business income, add to IFOS. Okay, and interest on IT refund, that is only less because it is not an income, so that is only less. Now on the debit side, okay, the repairs to building is okay, business item. Advertisement is business item. Amount paid to Scientific Research Association approved under section 35. Now Scientific Research Association, whatever contribution you give, that is allowed as a deduction, is an incentive provision, and you have already debited that, and section 35 is already giving you a deduction for that, so that is okay. Interest is a business item. Traveling is a business item. Okay, printing stationery is a business item. Salary to staff is a business item. So anyway, net profit is okay. This is how we started. So there is no other offensive expense item on the profit and loss debit side. So all the items are okay. And now you can just take up your total and update the answer.